In today's video, we're going to be talking about what to do when you owe the receiver of revenue money, and especially at something which they call a SARS debt compromise. Good day, my name is Heinrich. I'm the owner of SA Accounting Network. I've been in the accounting industry since about 2008. I'm also a qualified tax practitioner, so over the years I've helped many different people with their tax returns. In today's video, I'm really excited about this topic, especially with us going through COVID and all this stuff. A lot of people find themselves in deep water with the receiver of revenue, and we're going to be looking at what to do when you owe the receiver of revenue money, and something specific that we're going to look at is SARS debt compromises. So on the line, I'm really privileged to have one of the guys from Tax Consulting SA on the line with me. His name is Jashwin Baijoo, and at that firm they probably have about 150 tax specialists, like lawyers and stuff, that works there. So let me shoot down to my computer and then I can show you the interview that I did with him.
Thank you, Heinrich. So, as Heinrich said, my name is Jashwin Baijoo, and I am a legal manager at Tax Consulting South Africa. I head up the international tax as well as compliance divisions, and have been doing so for a number of years. With regards to the compliance division, our primary focus is aiding the financially constrained taxpayer in becoming fully tax compliant with SARS, while optimizing their tax structuring and minimizing their tax obligations.
That's good. And Jason, as I was preparing for today's interview, I was just thinking back about the days when I still lived in Johannesburg, and I had a couple of clients back then who owed the receiver of revenue quite an amount of money. And it was quite scary days, because they would actually phone the clients up to the listen, guys, you have to come and see us, Alberton branch. They've got this huge building there, the receiver of revenue. You have to walk into this huge room, and then afterwards they push you like into this little boardroom with 4 or 5 people from the receiver of revenue, and they just bombard you with questions and asking you how you're going to pay. So I think that was quite scary, and I think just the authority and the power that those people have. I remember the one client, this guy was crying in that little boardroom. This guy was in tears, and the guys just told him, listen, by the time you get back to your office in Boksburg, we've closed your factory, we've emptied your bank account. If you don't come with a solution, that's it, we're going to pull the plug on your business. And obviously that's been quite a while ago. I think maybe just to start off with, what is the process if you owe the receiver of revenue money now? How does it happen? What is the process that they go through?
So if we look at how it happens, there's 2 prongs here. You have your individual taxpayer on one hand, and you've got your corporate taxpayer on the other hand. Now, as our viewership would be aware, an individual taxpayer, dependent on circumstances, is typically subject to provisional tax, to personal income tax. There's a possibility of some dividends, just depending on exactly how their affairs are structured. Whereas your corporate guys, there we've got VAT mandatory if it's above $1 million turnover a year. We've got monthly PAYE returns. We've got the EMP 501 recons. We've got the VAT recons. We've got corporate income tax. And again, dividends withholding tax, depending on the payment structure and how directors are remunerated. What we've seen, especially over the last 2 or 3 years, is a number of corporate entities have opted, and this is more from a moral and ethical standpoint, but they have opted to actually ensure that they retain all their employees, to ensure that there's no pay cuts. And yes, that is something that can be respected. However, in attempting to do that, and especially with the economic constraints with the repeated lockdowns, what has happened is these guys have taken money such as what would be due for VAT, any PAYE that was previously withheld, and they've retained that income in the business to ensure that there's continuity as a going concern, and to ensure that employees are paid, there's no retrenchments, etc. So as much as that's commendable from a moral standpoint, from a legal and from a financial standpoint, that's absolutely unacceptable. And the Revenue Authority has shown some leniency in understanding that position, especially with trying to minimize the unemployment rate in the country. But ultimately, these guys are going to have to pay it forward at some stage. And with the individual, on the other hand, it ranges from your everyday taxpayer to your expatriate that may be earning millions, but because of the travel restrictions, they have been forced to work remotely from South Africa, meaning they do not meet the 183 days out of country and don't qualify for the Section 10102 exemption, which is ultimately an exemption from taxation on the first 1.25 million of their annual income. Those guys have been hit with a massive tax liability. And I've seen a couple of them from provisionals this year, where in prior periods, the guy's liable for 100, maybe 200,000 in his annual taxes. Whereas in the last batch, it's ranging between 700 to $1 million. And that is because there are certain exemptions that were not applied based on the fact that he then worked remotely. So those are your two options as to how it arises. We have seen instances where there's just complete historic non-compliance, and that is either due to poor advice from an erstwhile advisor, due to, the taxpayer not being aware of exactly how taxes operate, as well as your business owners, your entrepreneurs, your small to medium enterprises. They're not all that clued up, and they typically don't have in-house financial guys because it's a startup. So they tend to outsource this. And if they've been led astray, there are corrective measures, but there's also a number of red flags that a taxpayer can see prior to getting in hot water with SARS.
Yeah, that's good. So the normal type of process that the receiver of revenue would normally follow, let's say, for instance, I submit my tax return. Now all of a sudden I'm sitting with assessment of 100,000 Rand. What is the steps? I know that they send out, by default, they start sending out letters after a certain period of time, those legal notices and stuff. Do you maybe just want to run us through the process of how it normally would unfold?
So in the normal course, the taxpayer submits a return and an assessment is raised within about 48 hours on SARS's side. That assessment then provides a payment date, and in some instances, a further month of a grace period, which will be noted in the top right corner of the assessment. So a taxpayer can always refer to that for exact payment date and if there's a grace period permitted, until when. Now, once those dates have lapsed, that is when SARS will make first contact. We typically see it in the form of an SMS, maybe a cold call from one of their debt management guys, and that is then followed by a letter of final demand. That letter of final demand, from date of receipt, commences the 10-day count from the next business day. So if it's received on a Sunday, your 10 days commences on a Monday. All right. If it's received on a Saturday, the same, it commences on a Monday. So it's 10 business days that SARS then permits the taxpayer to respond to that letter of final demand. Now, there are various forms of responses which can fall within the 10 days before we move on to what happens if you don't respond. One of those responses is a suspension of payment application, which is then to be followed in most cases by a notice of objection by the taxpayer in the event that they disagree with the liability raised by SARS. The basis for this objection can be ascertained from the assessment, where SARS notes what deductions and expenses they have allowed and disallowed from the taxpayer's actual tax return. Another avenue that can be followed is a taxpayer to enter into a payment arrangement with SARS. This is known as a deferral of payment. How this works is, if the taxpayer owes SARS R1 million, they may then request that the deferral speaks to a 10-month payment term, whereby 100,000 is paid to SARS on a monthly basis. And the third avenue is a compromise of tax debt, which we will get into in more detail later in this discussion. But at a holistic overview, how the compromise operates is it speaks to removing interest and penalties if they have accrued, and the taxpayer paying only a portion of the capital liability due, with SARS to write off the rest. This is, however, hinged completely on financial hardship faced by the taxpayer. So now that we've touched on the possible responses to a final demand, we can then look at what happens if you don't respond to the final demand, because it's not in every instance that SARS will email it to you or send you an SMS notification. Sometimes all that happens is it's uploaded onto the taxpayer's e-filing profile, and The average taxpayer does not check their profile every day or every second or even every week, to be honest. And I can speak personally. I mean, I haven't checked my profile since last year when I filed my return. So in that instance, with it being uploaded, it then becomes a case of, okay, the taxpayer genuinely wasn't aware of it. But SARS's argument is very much that, listen, we've uploaded it and it's there on e-filing. There's the date there. So technically, we've done our part. And they're not wrong. And giving credit where it's due, they've then followed due process. They've issued that final demand and it is accessible to the taxpayer. If that is then ignored, SARS will then proceed with an attachment. And in some instances, this takes the form of a third-party attachment. How it operates by law is the 10-day period as per the final demand must have lapsed. In some cases, SARS may send a final demand reminder, which does not necessarily permit a further 10 days, but is simply a follow-up on the initial final demand. And if still ignored, they will issue a third-party appointment notice to the taxpayer's primary bank firstly, and in the instance of a corporate client or an individual taxpayer or high net worth guy that has multiple accounts, will then proceed to issue the same notice to the other banks with which the taxpayer holds accounts if the tax liability is not satisfied by the primary bank. How this operates is the taxpayer does not get notice of the third-party appointment because from SARS's perspective, the notice was the final demand, which means no notice is given to the taxpayer and they can very well wake up tomorrow and find R500,000 missing from their bank account. And, as much as it's problematic in the case of an individual who's budgeted for monthly expenses, it's far more problematic in the case of a company. Should SARS decide to issue this notice on the 22nd of the month, and the bank makes the attachment on the 24th of the month, and the employer wants to pay salaries at midnight on the 24th, but there's no money left.
Yeah, for sure. So if, let's say, for instance, they find themselves in a situation where they issue this third-party appointment notice and there's not enough money in the account, what is the steps after that? Will they start studying assets? What is that process? Do they?
All right. So if there's not enough money in the account, and to give a more real-life example, you got a notice for R500,000, you only have 200,000 in your bank account, still a balance of 300,000. SARS will take that entire 200,000. They may leave you with a few R1,000 for monthly expenses if they're feeling generous. And they can then proceed to approach the court for a judgment against you. How this operates is it's treated as a civil judgment. It has the same effect as a civil judgment. However, the same legal process is not followed. In the event of a civil judgment or default judgment, what happens is summons are issued, there is no response, and there's no right to appear on behalf of the defendant. So the plaintiff goes to court and takes either a summary or a default judgment, summary in the case of attendance and default in the case of non-attendance. Those judgments can then be rescinded by operation of the law. Now, in the instance of SARS taking a judgment against you, all it takes is the senior SARS official to take a written statement down to the courts, get it stamped, and it's then considered enforceable as a judgment.
Sure.
What follows on from that may be a garnishee order. So against an employee who owes SARS liability, the garnishee is then issued and a portion of their salary is then paid over by the employer on a monthly basis to SARS. It may also take the form of a warrant then being issued for the attachment of movable and in some extreme cases, immovable property. The only saving grace in this regard is SARS will not, in 99% of cases, they will not attach a taxpayer's primary residence. If you've got a rental property, they're more than happy to attach that. If you've got two vehicles, again, second one's probably gone. Sometimes even your primary vehicle, but they will not take a primary residence.
Yeah, that is at least a little bit of good news. And yeah, so just jumping to the topic. So I think we obviously talked about the process and the timeline of when certain things happen. If I decide that I want to apply for a SARS for the debt reduction thing or the debt compromise, at what stage do we do that? Do I wait until the receiver of revenue comes knocking on the door, so this now want to start attaching your rental property, or how far down the process do I need to go before I can start applying for that debt compromise? Is it right in the beginning? Can I do it at the end? Can I do it somewhere in the middle?
So my advice is always there is a first mover advantage. In the event that you become aware of this liability before SARS reaches out to you, or you become aware of it upon receipt of an assessment from SARS or even a demand, that is the time to act. It is never too soon to start engaging SARS. It may be too late in some instances, but that first mover advantage and those proactive steps shows to the revenue collector a willingness to voluntarily be compliant. And when that is shown, they are more lenient in terms of allowing a bit of leeway as to the actual compromise and the mechanics behind it.
That's good. And generally, do you think it's quite successful? Is there situations where the receiver of revenue will disallow a debt compromise?
So a compromise's success hinges on the affordability of the taxpayer. If the taxpayer is sufficiently cash constrained, and as an example, a business that has a 10 million loan liability but's been running at a loss for the last 5 years and is technically insolvent, or an individual taxpayer that has a 2 million rand liability but has been unemployed for the last 6 months. Those are all aspects that can add weight to affordability. What SARS looks at, and the exact term, is financial hardship faced by the taxpayer. If you can evidence that financial hardship and show that the tax liability is far beyond the means of the taxpayer, be it an individual or a corporate, then SARS are amicable to entering into these negotiations and granting relief in terms of one of the debt relief mechanisms. However, discharging this burden of financial hardship is becoming harder and harder, and that's because SARS is becoming more stringent and more thorough in their approach. And as an example, we had a matter about 3 weeks back where we submitted an application on behalf of a company, and it was a closed corporation actually. And SARS immediately said, by virtue of the Section 200, we're entitled to peer into the affairs of the director, because as we know, in a closed corporation, director holds personal liability. And they can then delve into, okay, the director must then provide us with a assets and liability register with their personal bank statements, with a list of all of their policies, their RAs, if there's a pension fund, whatever the case may be. Typically, under the normal operation of the law, organizations are not permitted to pierce the corporate veil, which means an entity and its shareholders and directors are treated as separate juristic entities. But in order to gain favor with SARS and for the debt relief mechanisms to successfully operate, SARS are entitled to do that. And that speaks to Section 181 of the Tax Administration Act, which specifically says SARS may then request information on the directors or shareholders or members personally.
Yeah, that is quite a scary thought, because I think in the past, like you said, people used to use a separate legal entity like a closed corporation or a company just to almost trade reckless, if you can call it that way. And if the wheels fall off, then they just say, sorry, okay, liquidate this one, start the next company, and we just carry on again on that side. I think there were two things that I wanted to ask you. What about non-compliance? I know that a lot of businesses, if they find themselves in a situation where they owe the receiver of revenue money, then normally most of those guys would not be fully compliant in any case to start off with. There will always be an outstanding pays you in return or VAT return. Can we start with that debt compromise process if there's any returns or if there's non-compliance in terms and on the side of the taxpayer?
So there's two answers for that. One is that any debt relief mechanism hinges on full compliance, which means registrations as well as submissions must all be fully compliant. A taxpayer can very easily check this with the tax compliance status. It's a little tab at the top of the e-filing profile. So all your submissions must be in. And the second answer to that is, if you are holding back on submissions because it's going to escalate a liability you already owe to SARS, or it's going to instate a liability to SARS, it's never a wise move. Because if you hold back on a return, SARS is at liberty to raise an estimated assessment. That estimated assessment, 9 out of 10 times, is not accurate. It's actually an overestimation, which means you become liable for more than you're actually due. And with regards to a compromise, one of the reasons why we always advise that you must have full compliance is if you've submitted all of your tax returns, we can then include all periods as well as all tax types in that application. It makes no sense for me to submit an application today that covers the taxpayer up until the 2019 year of assessment. They've got 2020, 2021, all outstanding, income tax, PAYE, VAT, and it's successful. By some miracle, SARS didn't pick up that there's returns outstanding, and it's a successful application. And off the back of that application, they decide, okay, let's submit the rest of our returns. And another 1 million liabilities raised, because you cannot enter into a compromise within 3 years of your last successful compromise. So it defeats the purpose to an extent. It opens the taxpayer up to further tax exposure. And ultimately, you're still going to end up paying. But further to that, if you enter into a compromise today and you sign that agreement today, it also has a stipulation that in the event of any of your current or future compliance not being up to par, it could be something as simple as you forgot to file a PAYE return for August 2022. SARS can revoke that compromise immediately, and the entire liability is then reinstated.
Yes, I've heard of that, and I think that's quite a scary thought. And I think something that he mentioned there about the 3 years thing is quite interesting, because I know with our practice as well, obviously we've got a small accounting and tax practice that we've seen with, in the past, the receiver of revenue was quite lenient in terms of writing off penalties and stuff like that. But we've seen it more and more coming through now, where they say, sorry, but we wrote off a penalty 2 years ago, and because you're falling within the 3 years, they're not going to allow the consecutive penalties to be written off again.
Correct. Remember, there's various mechanisms. So there is a request for remission, which pertains solely to your interest and penalties, and that typically forms part of your dispute process. Then there is a compromise that has a 3-year bar, and the voluntary disclosure program, if you submit a VDP application, it has a 5-year bar.
Yes. Another question that I've got, and this is also, I think, probably quite a debatable thing, is what if the company's got other creditors? And now, would it be unfair towards the other creditors if SARS writes off a portion of their debt, but the other people don't get any advantage or anything like that? Does the receiver of revenue look at other creditors inside a business as well?
So the receiver of revenue does, and in some instances, they do actually request a debtors and creditors analysis from a corporate taxpayer. The reason for this is, one, a specific averment must be made that by virtue of entering into a compromise of tax debt or a deferral of payment, there is no prejudice suffered to other creditors to the business. All right? That's the first point. And the second point is, even with the compromise of tax debt being in place, it does not detract from the liability a taxpayer may have to other creditors.
Yes. Tell me something, what is the success rate of debt compromises? If you have to take, let's say, for instance, a percentage out of every 10 that you apply for, what is the success rate? 8 out of 10, 9 out of 10, 7 out of 10? Because I think a lot of people probably are scared about the risk as well. Now I go to the receiver of revenue, say, okay, yeah, I'm willing to make some arrangement. They just come and say, sorry, we're not going to allow it now. All of a sudden, I've got to find R1 million to pay the receiver of revenue. Obviously, that's the advantage of people working through you, is you would obviously review everything before you actually go to the receiver of revenue.
Yeah, so it's not just that. Our model is that we chat to the guys at SARS before submitting the paperwork, which means at the outset, we already have a gauge of where their stance is and what proposal would be acceptable, even if it's a hybridized payment solution. So it's very much engagement with SARS before submission to SARS to gauge where they're at, where their stance is. And off the back of that, we can advise taxpayers. If we were to look at a success rate, SARS does not just decline a compromise application and shut the door on you. In the event that a proposal is too low, they will send you a letter of declination, which will stipulate the precise reason for that proposal not being accepted. But before it gets to that stage, the process is that a submission is made to SARS. It's then allocated to a debt management official. That debt management official is not the one that makes the call. They are merely a screening process. They screen, they make sure all documents are in order, and they conduct a means analysis on the application. Only if they're satisfied does it go through to the tax committee. The committee sits every Tuesday in some regions and every second Friday in other regions, such as Gauteng. It's an every second Friday story. And that committee then makes your final decision. It's comprised of 5 members from various units within SARS. What then happens is, if your application is accepted, it will be communicated to you by the official managing the application, and thereafter followed with the Section 200 agreement for confirmation and signature. If it is not accepted, you will get a letter of declination stipulating the reason, and it is then possible to engage SARS further to present an increased offer to the committee, which the committee will then reconsider. And you can do this a number of times. And the reason I say this is because the 3-year bar applies only to successful compromises. In the event that you're declined today, I can resubmit for you next week, and we just add a little bit more to the offer. If SARS is not amicable, or if the taxpayer opts to go for a different route, they may then use the deferral mechanism, where they take that 1 million liability and they split it over 10 payments. So there is always an avenue to resolution.
Yeah. So it's not like a thing where they work on a fixed percentage of to say, okay, that if you put in a, let's say for instance, you come to SARS and say, okay, I owe you R1 million, I'm willing to pay 200,000 Rand. So there's not like a fixed percentage. It varies upon every application. Am I right?
That is 100% correct. On the face of it, in your example, I'm quite sure SARS will say no. But we have had very extreme cases where SARS has settled for 10%. And I mean, one that comes to mind for me specifically, and this is where SARS's efficiency blew my mind. From submission to conclusion took 2 weeks.
No way.
In 2 weeks, I submitted and I had a compromise agreement in my inbox within 2 weeks. So some SARS officials obviously more efficient than others, but that very much also hinges on the relationship we have with SARS and specific officials, where it's a good working relationship and we know the correct channels of escalation. So with regards to the compromise process and that particular matter that comes to mind, I think we settled on 740,000 in settlement of a 7.5 million liability.
Yeah.
But in that particular instance, there are factors. The company was not trading for the preceding 12 months, and the company was fully intended on winding up as soon as they were tax compliant, which means there was no possibility of future revenue being generated. All of their projections were zeros, no income for the last 12 months. And that instance is very rare because 90% of the time, nobody wants to close their doors. Nobody wants to say, you know what, I'm calling it a day, throw in the towel. And then we've had other instances where it's very much a discussion with SARS. It becomes quite a labor-intensive process with a couple of roundtable chats with them. But ultimately, we still settle on a percentage that is far more favorable than the total liability.
Yes. Just something quickly that you didn't mention just now that it might be worth just exploring quickly before we wrap up. You were talking about hybrid payment systems. Do you maybe just want to elaborate a little bit on that? Do you have to pay a certain portion up front and then repay the rest in payments? How does that hybrid system normally look?
Right. So by virtue of a compromise, you pay a reduced settlement amount and SARS would write off the balance depending on your financial circumstances. In terms of a deferral arrangement, you still pay the entire liability inclusive of interest and penalties, but in a number of monthly installments. What we have come up with, and SARS has accepted in some occasions, is the hybridized payment solution. The hybridized payment solution is structured in the fashion of a compromise, whereby you owe them $1 million. We tell them, okay, we'll give you $500,000, but we will give you $500,000 in 10 tranches of 50,000 Rand a month. So it's a compromise in the sense that it reduces the taxpayer's liability. And the hybridization comes in is because we use the deferral mechanism as well to allow the taxpayer monthly installments. And this just works best for a taxpayer's cash flow, especially if it's a startup company or if it's an SME. It keeps them going, they continue ticking over, and ultimately a year down the line, they're fully compliant.
That's good, Jashwin. I think that's brilliant. I really want to commend you guys for the work that you guys are doing there and just the way that you guys help businesses with these type of things. And so if I'm in a situation where I'm in trouble, I know that I'm not going to be able to pay the receiver of revenue. I've received my first legal notice on my e-filing profile. I'm lucky enough to find out that I do have this thing. What's the next step? Where do I get hold of you guys? How does the process work? How do you guys help me?
So a taxpayer or a client, or whoever it may be, is more than welcome to hop onto our website, just taxconsulting.co.za, fill out a contact form, or alternatively, they are welcome to email any of us directly. So myself, it's jashwin@taxconsulting.co.za. That's JASHWIN. Or alternatively, because emails and the back and forth formal process can be quite strenuous on your everyday taxpayer that's not always in front of their laptop, I'm actually happy for taxpayers to pop me a message on LinkedIn, any social media platform, and ultimately just to manage engagements, more than happy to actually then engage further on WhatsApp, hop on a quick call.
That's good, yeah. So I think just the contact details for the people watching, I'll share it in the contact details in the description of the video as well. And I think, I think we covered a lot. I think the main thing, the purpose of this video is just to create awareness, just to let taxpayers out and they know that if you do run into trouble with the receiver of revenue, there are ways that you can compromise some of your debt, which will obviously bring some relief for a lot of small businesses out there. And if I just listen to some of the success stories that Jashwin and them were able to help small businesses out there compromise some of their debt. So I just want to thank you once again for your time today. For the guys watching the video, remember just to like it as well, subscribe to the channel. The contact details for Jashwin is in the comments of the video as well. And then, keep an eye out for the next video. Jashwin, I thank you really, really so much for your time today. I think you added a lot of value to a lot of people. Thanks.